Hi and welcome to this week's video analysis for the dollar index and FX majors going into the week 8th of April 2019. We're going to look at the dollar index, break down the FX majors, basically highlighting what medium to long-term chart formations we're seeing this week, and also our bespoke support and resistance. On the docket, Monday, Tuesday, pretty quiet. We've got the Bank of Japan governor speaking pretty early on Wednesday morning, and then we've got the ECB rate decision on Wednesday, followed by, or in conjunction with, I should say, some US figures, the CPI inflation figures. So it could be quite a busy day Wednesday, and then of course Wednesday night we've got the FOMC minutes. So it's really the day to be on your toes, if you like. Overnight Thursday we've got inflationary figures out of China. Then we've got consumer price harmonized index for the Eurozone on Thursday morning, and then Brexit deadline on Friday. So a volatile week. I think just looking at the charts, the bias is probably still to the downside for cable. But let's run through and see what we've got. So dollar index first. Again, it's just we're having a prolonged period really of consolidation. If we go to this, which is the measuring tool, we can see 33 weeks now where we've really seen little net movement. If we put an RSI, which is the relative strength index, down here, we'd see it just gyrating around the 50 level, which highlights we've got no clear movement in one direction or the other. What we have got is an ending wedge pattern. We've got a 61.8% Fibonacci level here and 97.86. We did think we were going to break this wedge formation to the downside a little bit earlier, but at the moment this chart's sort of selling into rallies, suggesting selling into rallies. Got a morning doji star here, which is probably positive for short-term bias, but like I say, the medium-term bias is still to the downside. And in fact, if we go to this chart, this is the 4-hour chart, we could be forming a bearish ascending wedge formation. We need to see a break pretty early on next week, around about 97.20. Measured move target is down here, which is the base of that weekly wedge formation, around about 96, 95.75. So really mixed at the moment intraday, but with that medium-term bias still looking to sell into rallies for the dollar index. So going into euro dollar, and again it's pretty mixed and volatile. Weekly chart, again we can actually see here, well, this is the daily chart, sorry, we formed an evening doji star pattern. We had some bespoke resistance at 112.58. We just failed to get through that resistance. We've seen inside soldiers posted on the daily chart, and that highlights investor indecision. We have seen a rally being sold into. We've got this large wedge formation. The long-term bias is to break to the upside, as long as this low, which is around about, let's just see, there's the low trade, 111.76. As long as that holds, then the next wave up should be impulsive and be the third wave. If we break there, then we could see a move down to here, which is 110.73. Other things to note: possible head and shoulders formation, again on the daily chart, but needs to break all the way up here to confirm. And then the intraday chart, again, it was something that we were looking for on Friday and we didn't get. Possibility of a reverse head and shoulders, the left shoulder, head, right shoulder. We need to break this level here, 112.60, measured move target 113.30, and then up here 113.70, which I think we mentioned it last week, which is the base, or sorry, the trend of lower lows. So basically a rally up to there, some mild correction, and then a push on is what we're looking for. So again, we're mildly bullish, but we need to see a break of some of these resistance levels. And like I say, at the moment 112.50 and 112.59. So if you just go back to this chart, sorry, to 112.50 and 112.59, that's the barrier at the moment, and we need to get through that barrier to continue and move to the upside for euro dollar. Cable is a different picture. The monthly chart is a buy trigger. We've got a bullish outside month. 1, 2, 3, 4. For that to break, we would need to see a move lower and close below 127.40. So basically, with these demark counts, you count back 4 candles. So this is 1, 2, 3, 4, and it's the close of that candle there. So the scope for quite a decent move to the downside without breaking this bullish count on the monthly chart. It was a perfected 9. It's a bullish outside month, and it's actually also got what they call a TD flip. So the long-term bias, I believe, is still to the upside. Short-term is a different story. If we go to this time frame, daily chart, broke this wedge formation to the downside, retested it 3 times. We've now moved lower. The reason sort of I'm not getting too bearish on cable is because I still think we've got to break this formation. So basically, we've got a trend line support 129.82, possible head and shoulders pattern. 2 resistance levels next week, 132.44 and up here 133.40. I don't think we're going to get there. The reason why I'm not getting too excited is because we've got bespoke support at 129.97, and we obviously failed to get through that on Friday. So we really, at the moment, cable selling rallies or selling a break really for a push lower. I'd say immediate sort of area of support is here, which is 127.73. This wedge could be taken from 2 places, could be taken from here, or we could take it from here. I think probably limited downside for sterling dollar, but like I said, it's Brexit week again, so we'll wait and see. Dollar Swiss, again, we've got it's all bearish for the dollar really. We've got an ending wedge pattern. We have got a lower high now, and you would expect this to be an impulse move to the downside, and it isn't as yet. But what we have seen is 2 weeks of indecision. These are inside soldiers, so it's basically showing that the correction to the upside is mild. In other words, it took 1 week to get that low. It's taken 2 weeks to try and recover the losses, if you like. If we go to the daily chart, here I believe we're forming again a head and shoulders pattern, but a bearish one this time. So left shoulder, head, possible right shoulder. We got the big figure keeps on attracting sellers. We've got a 50% Fibonacci level, 100.09, and then we've got the 61.8% pullback level at 100.36. So sort of looking at that band basically to try and get short in dollar Swiss. A break of 99.70. Which is bespoke support, and the move low is probably already underway. A break here, 98.60-ish, and the measured move target is down here at 96.36. Dollar yen, is this formation playing out? Are we moving higher in a 5th wave? This area here was quite pivotal. We can see on Friday that we posted little net change, spinning top doji, whatever you want to call it. It basically highlights indecision. If we go to this time frame, looks to have formed a 5th wave. We've got an ending wedge pattern. We didn't break the wedge on Friday. We were looking for a wedge break. Supports around about 111.60. Measured move target is 110.80. We've got bespoke support at 110.88, so debatable whether or not we're going to get past there, but the immediate bias looks to the downside. Dollar CAD, and again, this is one that isn't really playing the formations. Let's go to the weekly chart first. Bearish outside week, choppy recovery, inside weeks posted, So again, it's just highlighting consolidation really. It's not really until we get to the intraday charts that it looks a bit more volatile. And again here we broke the wedge formation to the downside, but it hasn't held. What we have got, we've got a DMARC 11 count, 13 counts to the upside, normally highlight exhaustion. So we do look for rallies to be sold into. We've got 134.47 as a trend of lower highs. And we've got bespoke resistance at 134.30. So that's what we'll be looking at the beginning of the week. If we break there, then we've got this confluence area, okay, which is the 78.6% pullback level and this trend of higher highs. And I'd expect that to hold. And it'll be interesting where this 13 count completes. In fact, this count here is an 8. And basically the 13 count, for it to be valid, should at least spike higher above the 8 candle. So the high of the 8 candle is 134.50. So really monitoring price action at the beginning of the week. See whether or not we get a spike to the upside that we can sell into. But the bias is still bearish. Aussie dollar. And again, long-term picture looks bullish. Not that chart. This one looks to have completed an Elliott wave formation. Got a bullish outside candle or hammer base on the weekly chart. But then we've had, mixed volatile trading. You can see the last 3 weeks got spikes in all directions, and that highlights indecision. If we go to the daily chart, looks to be forming a possible reverse head and shoulders pattern. We're in between bespoke support and resistance here. We've got bespoke resistance at 71.57, bespoke support at 70.59. So again, let's have a look. How many days of consolidation? I'd say 15 days, 3 weeks, where we've seen little net movement in Aussie dollar. So buying dips and possibly selling rallies next week, but the favoured call is to the upside. Euro sterling, let's just quickly look at this chart. Full ABCD corrective formation takes us down to 184.10. We've got bespoke support around about 184.65, and again just spikes in different directions, highlighting this indecision. If we go to the daily chart, again the RSI is just hanging around that 50 level. We've got 27 days, so over a month's worth of trading, where we've seen little net movement. To the downside, bespoke support 84.65. To the upside, bespoke resistance at 86.90. Preferred trade is to buy a dip, but obviously being wary of that ABCD formation target, so we could spike through that support and then move to the upside. In fact, if we did get a move lower, we can play this out. So if we spike through to the downside, that could form a head. We then move up. This could form the neckline. So that would be the left shoulder, head, neckline, down again to support, possibly. Form a reverse head and shoulders formation before we move to the upside. But at the moment, as you probably know, we're just looking to buy dips. And we're not really playing around inside this consolidating pattern. Euro yen, again, I think we just go to the shorter time frame. We've got some bespoke resistance here at 125.80. Notice I've put weekly there. It is the weekly resistance, and basically what that does mean is that we can spike through, but as long as we close below it, then that resistance is deemed to have held. Elliott wave 1, 2, 3, 4. Could we see a 5-wave breakout? Again, pretty wary of this because it looks like a wedge pattern. So at the moment, intraday or short term, still looking to sell into rallies in euro yen 126.23, obviously being prime area for shorts. Okay, I hope you've found that educational, and we'll speak to you again on Wednesday and then again on next Monday with the weekly update. Many thanks. Cheers.